Well, thank you so much for keeping it Channel 1. Now I move on to the interview segment whereby we are joined by a doctor, or rather a doctorate candidate, Dr. Julian Rowa. Well, welcome, sir. I understand it's your first time here. We shall be discussing matters pertaining to non-performing loans. Well, now to kick us off, non-performing loans have doubled from an average of 4% 10 years ago to the current about 8 to 9%. This is partly due to the harsh economic factors as well as the COVID-19 pandemic, which has seen the stock of non-performing loans drastically increase. In the first half and quarter financial results released by banks in 2020. Now, to start, in your own assessment, what could be fueling the growing non-performing loans, especially by the banks?
First, thank you for having me. When we're looking at non-performing loans, there are 4 variables that cannot be looked at in isolation. Recently, we heard about the delay of our national debt payment to China to the tune of $245 million. We also now aware that non-performing loans have hit an all-time high of 1.63 trillion, I think, which is about 54.2% of the total loan book. And then the other story that is also depressing is that when you look at the Credit Reference Bureau, where we list defaulters of loans, we are told the number has hit an all-time high of 14 million. Then the question we must ask ourselves is the financial service providers, how are they performing? Using the recent data, if you look at their performance last year, of course, profitability has dropped, but within the range of 10 to 30%. Now, looked at in context with these other variables that I've mentioned, you can tell that there's a fundamental problem. So when we're talking about non-performing credit facilities, we must think about how the economy is performing, and we must also think about the prudency of our lending at the same time. So those would be my very quick thoughts on that.
Well, even though the government has been reducing domestic borrowing, banks hold the most stock of treasury bills and bonds. And county governments have been in the recent past borrowing from banks, which is crowding out the private sector. How should the country address this issue?
I think we need to get to a point where we agree on what the proportions of lending will look like. When we talk about what needs to go to the private sector, when we talk about what needs to go to the public sector, we need to find a structure that fundamentally governs that. For as long as that doesn't happen, of course, banks will go for the easier option. And if trading in bonds and treasury bills and doing business with county government, which probably guarantees repayment, if that's going to be left open-ended, then of course they'll go for the easier way. To address that or to redress that, I don't know whether it's a question of legislation or whether it's a question of supervision by the regulator, but we must get to a point where we are saying that in your lending portfolio, this is how we see it spread. And there has to be a limit and a ceiling around where you can either lend to government or you can lend to individuals or in the private sector. Until we have that semblance of order, this problem will persist.
Well, what strategies should banks employ to address the issue of non-performing loans? Do banks reduce lending or just take risk and deal with the consequences?
I think the first question that I would ask myself is our lending prudent? That would be the first question. I think about 15, 20 years ago or thereabouts, there used to be a certain element of governance that used to restrict banks in how they can give out money. For example, the debt ratio was a big aspect of this, where beyond which there was a limit that was given. I think at the time it was around 5.9 or 6.2. And anything below that, then there's a window to lend. But anything above that ceiling, then there was no window to lend. I don't know whether those regulations are still being followed to the latter. But we must also then agree that there's a new player in this particular, choosing the same piece of pie. Now, if you think about the digital online lenders, they have fundamentally changed the platform in which we do business as financial service providers. Research that was done by DLAK, which stands for Digital Lenders Association of Kenya, who commissioned a research body in Colorado, US, by the name Geopol, came to some very interesting findings sometimes in December of 2009. One, we have about 120 digital lenders in this country as at October 2019. Two, the research that they did revealed that of the 4,000 respondents to their questions or questionnaires or research, if you like, 71% had borrowed money in the last 6 months. 83% of those have borrowed again, and about 88% are happy to recommend that line of borrowing to somebody else. So what am I trying to say here to your question? What can banks do? Can they do more? First, it's to recognize that there's a new player in town, and there's a need for them to co-join at some point and start collaborating, especially in the area of information sharing. So one, prudency. Second, appreciating that we have new players in the market, and you cannot run away from that reality. For example, do we have a depository of information from all those channels that offer credit services? And here I have in mind the online lenders, the banks, SACCOs, chamas, although it's a lot more informal. And of course, we also have Shylock's, again, very informal, and you may not have it in this particular circle. And probably insurance, because I also know that insurance firms also do lending. But the question is, do we have a central database where information on credit facilitation to clients, do we have that information readily available so that when one arm of a lender wants to do lending, they are guided by information? I doubt that is there. Do you have a roundtable kind of working arrangement between the different players so that they can all see that they're working for the common good and that they must exercise some kind of self-governance, especially for the digital online lenders, working in collaboration with established banks to make sure that they do not kill the goose that lays the golden egg? I'm seeing a situation where that is being ignored, and in the long term, I don't think that it is feasible or viable for the country or even for the financial institutions themselves. Now, let's also talk about supervision. Although DLAC talks about the intentions of coming up with a forum where they can be well regulated, the question becomes, what happens until that kind of situation comes to be? Central Bank has made it very clear that digital lenders are not within their purview. So what we have is that a segment of money lenders in this country are not governed in a way that can bring accountability to what they do. So those are some of the fundamental issues that I think the financial sector needs to look into. But back to the question of the banks, it's a high time now they went back and developed products that directly responds to the devastating effects of COVID. I am yet to hear one banking institution saying or coming back and say, we have this product that we have developed, or there's this line of service that we have made available to our clients that they can draw from so that they can tackle those challenges that they're facing in these difficult times. I mean, the irony of it is at the end of the day, you want this customer to pay you back. But if there's no facilitation for them to be able to do that, what does that mean for you in the mid and long term? For me, those are the fundamental questions.
Mm-hmm. Speaking of facilitation, do you believe consumers maybe need more loan restructuring as the non-performing loans increase in the sector despite the easing of COVID-19 restrictions?
Precisely, and that's why I'm talking about new products. So we have to become very creative at how we respond to COVID, in being sensitive to the customers that we do business with, because at the end of the day, we draw from them. So restructuring is one way of looking at it, but it must be very deliberate. For example, if somebody has a loan arrears of X amount of money and he has been listed as a bad debtor, how do you get them out of that situation? Restructuring could be one of those, but is it also true that that person may require further funding to get them out of that particular hole? That's also true, depending on what the situation is like. So it's about banks becoming less traditional in the way that they've done their business in the past, become more radical. I've used the word radical deliberately, not reckless. Become more radical in coming up with the innovative solutions to the challenges that they face today. So yes, they must restructure, but they must go beyond restructuring. Restructuring does not mean suspending interest, because that's what we saw the last 12 months or so. And then it actually accrues, and then when finally you're activating the loan again, you're asking the customer to pay what has been held in abeyance over time. I think that is not right. Banks should become real. The situation we are facing is real. I know we are resilient as a country. Our economy is fantastic. It will probably respond to this crisis in its own way. But I am persuaded that banks must be deliberate in finding a lasting solution to this problem.
Mm-hmm. Well, even as we wind up, maybe financial institutions such as banks face the greatest risk of cyber attacks. In this era where it is recommended that some employees work from home, how can financial institutions keep their systems secure?
Interesting you asked that question, because just yesterday I was having that conversation with some contacts from South Africa and some friends in a local bank. And when we talk about working from home, the question I would ask as an operational person is, what process have you developed to support that new requirement? Banks are process-driven. There's clarity on where the process starts up to where it ends. But the dynamics have changed. The environment of working has changed. Now you have to work from home. That means that the process as you know it has to be shelved, and a new line of process design developed to fit with that new requirement. I've not heard, I mean, from my experience from the conversation yesterday, banks are still authorizing things past midnight because somebody has asked for this to be processed, and because they're not working within the office environment, they're forced to do it that way. What that does, it opens you to attack. So cybercrime, in my mind, will become a little bit more profound if it is not checked. But the best way to check it is to go back and look at your processes and ask the question, are they still fit for purpose? Or do we need to redesign them? So I want to agree with you. Thank you.
Well, that was Julian Rowa, who is the CEO of Shajuls Business and Management Consulting. Well,